Hey guys, how's it going? Christian Grohl here with Modern Williams Real Estate here in Riverside. Wanted to come on here very quickly and kind of tell you about interest rates, a little market update, and how interest rates are not as bad as what people are making them to be. So you as buyers right now, if you think you're priced out of a home, you're not. There's different types of scenarios that lenders can do and different types of programs to buy your rate down. So wanted to come on here and talk about the 3-2-1 rate buy down, temporary buy down, and give you some scenarios. So 3-2-1 buy down, what it is basically for that first year, you're gonna have 3% less, second year, 2% less, and that third year, it's gonna be 1% less than what your rate would actually be. In the remaining years after that, it would be what that rate is, that what you were locked in at. So let's say you get that 3-2-1 buy down, and then you refi later, and we let the economy do its thing. So I'm gonna have my lender, Joe Wiggins, right here kind of talk to you and give you some scenarios on what a payment would look like with that 3-2-1 buy down.
That's right, Christian. There's lots of ways to create affordability right now. So let me show you the most popular one, and it's called a 3-2-1 buy down. And what you'll see is, for disclosure purposes, the rate's actually 5.99, so your note rate's 5.99%, APR 6.894. You'll see my payment notes. This is what we use. It's an FHA 30-year fixed for a first-time home buyer or somebody that's going to occupy as their primary residence to live in with a 680 credit score. And so if your score is higher than this, it could improve what you see. If it's lower than this, it could make it worse. So what happens is the seller, so Christian would negotiate, for example, the seller to cover a temporary buy down that's going to subsidize your payment, and it's going to make your year one payment based on 2.99% with tax and insurance. That's going to give you a payment of 3401. And then what happens is each year, so year two, it steps up and it's based on 399. So each year it's subsidized less and less. And so the payment's going to go up to 3711. Year three, it's going to go up, be based on 499. Payment goes up to 4041.33. And then your fourth and remaining term payment is going to be this 5.99% with a total payment of 4389.66. So why is the buy down so popular? It's popular because this subsidy that creates almost $1,000 a month savings in year one per month, so almost 12 grand in a year, 678 monthly savings year two, 343.33 savings year three, and then stabilizes and never gets higher than this rate or this payment. The reason it's popular is that the reality is you're probably not going to keep the loan more than 2 years. And so the seller is giving you this subsidy money to kind of offset this payment, as you see here, for the first 3 years of the loan until it levels out in year four. And what happens is if you refinance and only use, say, half of that subsidy, the other half actually goes as a principal reduction, which helps keep your costs low when you refinance in the future, which is most likely what's going to happen. So, Christian, this is hands down one of the smartest plays when it comes to affordability. And as a mortgage broker, we're actually given start rates that are in the twos, where a lot of other retail shops are easily in the threes or higher. All right, have a great one.